If you want to instantly increase your win rate and make more money trading, the best thing you can do is place your trade, turn off your monitor, and walk away. Just leave the house. Go look at a tree. Talk to a neighbor you actively dislike. Do literally anything else. The legendary samurai Miyamoto Musashi once said, "Do nothing which is of no use." Today, I am going to show you how the useless things you do in the middle of a live trade are the exact reason you are not profitable yet. You spend months backtesting a strategy. You sit in your room with a cup of coffee, clicking the forward arrow on historical chart data, feeling like a financial god. The math is perfect. The setups are beautiful. You risk $1 to make $3. The spreadsheet tells you that you are going to be rich by next August. But the second you put real money on the line, the spreadsheet catches fire. You take the trade live, and by Friday afternoon, your account is bleeding. You close the week in the red. You probably think your strategy is broken. You probably think the market makers are hunting you specifically, watching your tiny account through a satellite, waiting to steal your lunch money. It is a comforting thought, to be the victim of a grand conspiracy. It is also entirely false. Your strategy is fine. The market does not know you exist. You are simply doing one very specific thing the moment you enter a trade that mathematically destroys your edge. And the worst part is, you probably think you are just being a safe and responsible trader. There is a Japanese phrase for this illusion. Mizuni kaita moji. It translates to, words written in water. In a backtest, you let the math play out. You are calm. You follow the rules because there is no pain attached to losing fake money. But in the live markets, your beautifully written trading plan is just words written in water. The moment the live market flows, the pressure turns on, and your rules completely wash away. Math cares nothing for panic. When I worked as a data analyst for a prop firm, I had unrestricted access to the back-end servers. I analyzed the raw data of thousands of traders to find the exact mathematical difference between the 1% who collect massive payouts and the 99% who quietly blow their accounts. The numbers were entirely unsympathetic. I took that classified data and put it into a new book. It is not a book of theories or hopes. It is a book of cold mechanics. It gives you three massive advantages. First, you get the unrestricted server data. I lay out the exact win rates, risk-to-reward ratios, trade durations, and daily loss limits of the top 4,000 funded traders. Second, it gives you mechanical control strategies. These are practical, step-by-step rules designed to physically force patience, control your fear, and stop your overtrading dead in its tracks. Third, you get the survival guide. It outlines the exact cognitive shifts the 1% use to survive deep drawdowns without losing their minds. You live in a completely unnatural environment. It is time to mechanize your brain to survive it. The link to grab your copy of the book is in the description. You are a rational person. You are smart enough to learn technical analysis, but you are falling victim to a silent habit called trade tinkering. Trade tinkering is the illusion of control. It is what happens when you open a position on a 4-hour chart and then immediately drop down to the 1-minute chart to stare at it. You sit there, sweating through your shirt, trying to use sheer willpower to push a tiny green candle upward with your eyeballs. Because the human brain absolutely hates uncertainty, you start micromanaging the trade to relieve your physical anxiety. You look for reasons to intervene. You move your stop loss up by 3 pips. You close a third of your position because the market looked at you funny. You convince yourself that you are practicing elite risk management. You are actually just choking a profitable system to death. Remember Musashi, do nothing which is of no use. Moving your stop loss by 2 inches on your screen does not make you safer. Closing a trade early does not make you a genius. It just makes you feel like you are doing something. It is useless action disguised as productivity. In a sword fight, wasted movement leads to death. In the financial markets, wasted action slowly drains your account. Action is not always progress. Let us talk about the most dangerous lie in the trading community, the break-even trap. Every new trader is taught that moving your stop loss to break even as soon as you are in profit is the ultimate responsible move. You take a trade, it goes your way for 10 minutes, and you drag that red line up to your entry price. You lean back in your chair. You let out a deep breath. You tell yourself, I am in a risk-free trade now. The worst that happens is I lose nothing. It feels so incredibly good. It is also an act of pure financial cowardice. When you move your stop to break even prematurely, you are not protecting your capital. You are protecting your fragile ego from the pain of a losing trade. Markets naturally breathe. They pull back. They retest levels. That is how price moves. Getting stopped out at break-even right before the massive, explosive move you predicted happens every single day to anxious traders. You sit there, completely safe, making $0, watching the market hit your profit target without you. There is an old Japanese proverb that explains this perfectly. Koketsu ni irazumba koji o ezu. If you do not enter the tiger's cave, you will not catch its cub. You cannot get the reward if you refuse to take the risk. You want the baby tiger, but you want it delivered to your front door in a nice box. You do not want to walk into the dark cave where the mother sleeps. The market pays you a premium specifically for enduring uncertainty. If you remove the uncertainty by moving your stop to break even, you remove the profit. Safety is an expensive illusion. Now look at the math of your own destruction. Let us say your tested strategy relies on a strict risk-to-reward ratio. You risk $100 to make $300. Mathematically, if you stick to this, you can be wrong most of the time and still make a lot of money. It is a beautiful machine. But then Tuesday morning happens. You are in a trade. You are up $100. The market pauses. You get terrified that it will reverse and take your money back. So you panic. You smash the close button. You secure a small, $100 gain. You feel a brief rush of dopamine. You won. But you just broke the machine. You risked $100, and you made $100. You completely ruined the math of your edge. Because you are cutting your winners short, you now need an impossibly high win rate just to survive the week. You are no longer trading your edge. You have created a completely new, mathematically doomed strategy based entirely on your own fear. The Japanese say, Nito wo mono wa ito omoezu. He who chases two hares catches neither. You are trying to catch the hare of absolute emotional safety, and you are trying to catch the hare of massive, life-changing profits. You run around the field, exhausted, throwing nets at nothing. You end up with neither. Why do we do this to ourselves? I promise you, you are not stupid. You are a biological organism, making logical choices inside a completely unnatural environment. In almost every other profession on Earth, working harder and staring at the screen longer yields better results. If you are a programmer, typing more code gets the app built faster. If you are an accountant, staring at the spreadsheet longer catches more errors. In trading, screen time actively destroys your profits. The harder you try to manage an open trade, the worse the outcome will be. This happens because the human brain is a survival engine. It is wired by millions of years of evolution to spot threats. When you stare at a live trade on a 1-minute chart and a large red candle drops, your brain does not know the difference between a minor currency fluctuation and a hungry predator hiding in the bushes. Your brain floods your blood with adrenaline. It triggers your fight or flight response. You click the mouse to close the trade because you are literally trying to flee from physical danger. You are not trading the chart anymore. You are trading your own nervous system. Yuare no shotai, mitari kare obana. Look closely at the ghost, and it is just dried pampas grass. Fear makes us hallucinate danger where there is none. On a 1-minute chart, a normal pullback looks like a terrifying ghost coming to wipe out your bank account. Your heart races, your mouth gets dry, you close the trade to survive. But if you just zoom out to the 4-hour time frame and look closely, it is not a ghost. It is just dried grass blowing in the wind. It is completely normal market structure. There was never any danger. You just scared yourself out of a winning trade. Fear makes you see ghosts. The only way to survive this is to completely detach from the outcome. You must adopt the strategy of a dead man. In 17th century Japan, the samurai were terrifying warriors. They moved with absolute precision and completely zero hesitation. The secret to their skill is written in a book called the Hagakure by Yamamoto Tsunetomo. He wrote, "The way of the samurai is found in death." A samurai fought flawlessly because he accepted that he was already dead before he ever stepped onto the battlefield. He did not fight to survive. He considered his life already lost. Because he had nothing to lose, he had no fear. Without fear, His technique was perfect. As a trader, you must become the samurai of your own account. The moment you enter a position, you must accept that the money you risked is already gone. Do not think of it as your money anymore. It belongs to the void. The risk is already lost. If you treat that $100 as dead money, you immediately free yourself from the physical anxiety of watching the chart. Your trading must become entirely binary. It hits your original stop loss, or it hits your original take profit. There is absolutely zero in between. You do not touch it. You do not manage it. You do not look at it. Be a dead man trading. You probably do not believe me yet. Your brain is telling you that you are different. You think your micromanagement is actually saving you money. You think your tinkering is a special skill. I challenge you to prove it. You do not have a strategy problem. You have a boredom tolerance problem. You simply lack the discipline to do absolutely nothing for the 4 hours it takes for your setup to play out. For your next 20 trades, you are going to keep 2 journals. In column A, you will track the real results, the results with your tinkering, the trades you closed early, the stops you moved to break even, the small, nervous profits you took. In column B, you will track what would have happened if you just walked away. If you placed the trade, set the stop loss, set the take profit, and went to sleep. You are going to practice the Japanese concept of hansei. Hansei means the relentless practice of deep, honest self-reflection. It means looking at your own flaws without any ego to protect you. When you finish those 20 trades, you will look at the 2 columns. You will realize that your brilliant management actually cost you 15% in potential profit. You will see, in black and white math, that your anxiety is the most expensive thing you own. The truth will hurt terribly. But the financial pain of that realization is exactly what will finally cure you of the urge to tinker. You will realize that the best trader inside of you is the one who does absolutely nothing at all. So the next time you find a perfect setup, and you execute your entry, do yourself a massive favor. Step away from the glowing rectangle. Let the math do what the math is supposed to do. You do not need another indicator. You need handcuffs. You need forced discipline. That is exactly what the Alpha Equity Manager does. It is a piece of software designed to protect your money from your own nervous system. You tell it your maximum daily loss. Let us say it is 2%. The second your floating loss hits that exact number, the system takes the mouse out of your hand. It automatically closes every open position you have. It completely disables your buy and sell buttons for the rest of the day. You can scream at your monitor, but you are physically locked out of ruining your life. And if you enter a manic state and try to cheat, if you try to open the settings and bump that limit to 3% just to take one revenge trade, you cannot. The time-locked vault instantly rejects your emotional input. It snaps the settings back to the rules you set when you were sober. It does not care about your feelings. It also calculates your exact dollar risk before you even enter the trade, making your account mathematically bulletproof against your own panic. The link to download Alpha Equity Manager is in the description. Secure your money. Trade like a machine, not a terrified animal. Then, go look at that tree. Go talk to that neighbor. Embrace the silence of a system that works. Peace is extremely profitable.